The threat of higher interest rates fails to dull the housing market. BHP expected to up its bid for UK-based miner Anglo American, and a gold watch on the wrist of an aristocrat that went down with the Titanic sells for a record price. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 29th of April, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. You're right. It is Monday, the 29th of April. Very big week coming up. We've all finished those school holidays that seem to have been going on for weeks and weeks and weeks and through Easter and back to normal.
We are back to normal, but I tell you what, you would think that particularly kind of last week, having had a public holiday in the middle of it, that it would have been a more kind of subdued news week. It was anything but, especially with kind of the BHP news kind of late in the week. It was an extraordinary week.
Yeah, we had interest rates as well. We had markets jumping around. It was a really busy week.
After the show, you have an interview coming up, and this is a really interesting conversation with Julian Biggins, the joint CEO at global alternative asset manager MA Financial Group.
Yes, so we talked to Julian about investing in property, but not property as you know it. We talked a little bit about commercial real estate, but we actually talked mostly about things like marinas and pubs and hotels and accommodation and stuff like that, alternative real estate. And what these guys are doing, MA Financial, are trying to make it accessible for more people. Now, obviously, we're not an investing podcast. Always seek your own professional advice on it, but it's definitely well worth a listen because it is, as an alternate investment, it's a really interesting option.
Yeah, it's a great chat. It's coming up after the show, so it is well worth sticking around for, as well as Fear and Greed the week ahead with our resident economist, Stephen Koukoulas. That's coming up a little bit later on as well. The main story this morning, Sean, though, the threat of higher interest rates in Australia after last week's surprisingly high inflation reading has done little to hurt the housing market, with auction clearance rates strong over the weekend.
There's definitely a growing feeling that the next move in interest rates isn't as certain as it was before the Consumer Price Index reading, which came in at 1% for the March quarter. I think AMP's chief economist Shane Oliver put it best. He said that sticky services inflation will leave the Reserve Bank cautious and still wanting more evidence that inflation's under control. Fair enough. He initially, this is Dr. Oliver, initially expected a rate cut in the middle of the year. Now he thinks that at the next Reserve Bank board meeting in the middle of next month, the middle of May, the board will debate whether a hike is needed. Now, he doesn't think it'll happen, but the central bank could reinstate its tightening bias and explicitly say another rate hike is now a high risk. The idea behind that is it may not happen, but it does give cause for thought if the Reserve Bank starts talking about a rate hike again. That in itself, that jawboning of the economy, can slow things down and help get inflation lower.
Sticky inflation.
You can't help it. You can't help it.
Oh, no, I have to destroy. I love the fact that economists have such extraordinary language at their disposal. Like sticky inflation. It really just kind of conjures up all kinds of images, don't you think?
Well, no, but then again, I probably was trained as an economist, so it's never kind of come across to me that way. Yeah. Sticky's a funny word, though, isn't it? You think Sticky Fingers, which is like the band or what your kids got.
Yeah. But so it just really just means just essentially inflation that's sticking around for longer.
Yeah, basically. It's harder to change.
Yeah.
Economics is actually just common sense with a lot of jargon around it. That's broadly what it is.
I like this. So markets are pricing in no cuts till next year. And as you said, economists are talking about higher rates. But really, home buyers just don't seem to care too much.
That's pretty right. Across the capital cities, there were 1,900 auctions over the past week. The preliminary clearance rate came in at 72.9%, which is 1.5 percentage points lower than a week early, but it's still really good. Melbourne came in at just under 70%. It was down on the week, but Sydney jumped to be over 78%. That was a really sharp jump in that city. In the smaller markets, Adelaide led the way with a preliminary clearance rate of 76%. Brisbane was 72%, Canberra 63%, Perth at 50%, albeit from a very small sample size. Certainly all this talk that rate cuts are going to be held off till next year and potentially there's a rate hike, that hasn't stopped home buyers from bidding at auctions.
All right. How did local markets perform on Friday?
Well, it was a pretty rough day, really. The S&P ASX 200 closed down 1.4% to 7,576 points, weighed down by a drop on Wall Street and a fall in the share price of BHP. More of that in a moment. Certainly a stock worth a mention from Friday is Newmont, which of course bought Newcrest, the gold miner, last year. It's now Newmont is now the world's biggest gold miner, listed both in North America and on the ASX. Its share price jumped almost 14% on Friday after its first quarter profit beat market expectations. Another good performer was ResMed, finished up 10% after its quarterly earnings beat expectations, and furniture retailing Nick Scali jumped 13% after it completed a $46 million placement to fund an acquisition in the UK. Having said all that, most other stocks ended down.
Now, checking international markets, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Plenty happening in the US.
Yeah. So the core personal consumption expenditure price index was released over the weekend. An awful mouthful.
I've just finished praising economists for the colourful language, the sticky inflation and the jawboning. And here you bust out the core personal consumption expenditure price index. Come on, Sean.
Yeah. Awful mouthful for a very important measure, though. In fact, this is one of the ones that the Fed Reserve looks at closely to judge inflation. It shows that prices increased 0.3% during March, which was actually a touch higher than expected. The figures came after economic growth data showed the world's largest economy slowing. That was late last week. Put all that together and Wall Street actually ended higher over the weekend. The idea that the slowing in the economy may weigh heavily in the Fed's thinking. That augurs well for the local market today. Now, on Friday this week, the Fed will meet to decide on interest rates. No one really expects any change, but what Chair Jerome Powell says will certainly affect markets. In terms of numbers, Brent crude is up a bit, trading just under $90 a barrel. Gold remains high, just above $2,335 an ounce. Iron ore's managed to stay well above the $100 a tonne mark, closing over the weekend at about $110. Copper hit a 2-year high, briefly pushing through the $10,000 per tonne level. The pressure on copper prices is coming from both sides, from the supply side, because there are issues around smelters around the place and smaller profit margins that are dissuading some suppliers in China, for example. Then on the demand side, there's basically plenty of demand because everything's being electrified. So that's why that's pushing up the price of copper. Finally, currency markets, Bitcoin's trading just under $64,000 a unit, and the Aussie dollar's buying about 65.3 US cents.
Sean, there is plenty going on. We'll be back in a moment with the rest of the day's business news. Sean, the National Cabinet will meet on Wednesday with a focus on violence against women.
Prime Minister Anthony Albanese made an appearance at the No More rally in Canberra yesterday and called for change to the legal system. He said, we need to change the culture and we need to change attitudes. We need to change the legal system. It's not enough to support victims. We need to focus on the perpetrators, focus on prevention. Mr Albanese called it a national crisis and said he'll hold an unscheduled National Cabinet meeting on Wednesday to address the issue. There were protests in 17 cities across the country over the weekend. Melbourne was one of the biggest. Thousands of people took to the streets, calling for immediate action to address the growing rate of femicide, which is basically the killing of women. Now, in the last couple of weeks, there have been some very high-profile cases in New South Wales and Western Australia in particular, and certainly something needs to be done.
Yeah, completely agree. Now, Sean, you mentioned BHP earlier. The big Australian is expected to up its bid for Anglo American following the rejection of the initial $56 billion bid by the UK-based miner.
Mining analysts reckon that the surprise bid last week is the beginning of a process which will result in a higher price being offered, while media reports today say BHP spent the weekend, or at least the senior execs at BHP, spent the weekend working on a new offer. Anglo last week rejected an all-share deal in which it would spin off controlling stakes in South African platinum and iron ore companies to its shareholders before then being acquired by BHP. Anglo chair Stuart Chambers called the proposal opportunistic and said it failed to value the company's prospects. The size of the prize that a takeover would bring is huge. BHP would be the world's biggest copper producer, the third biggest iron ore miner, the largest metallurgical coal supplier, and the third biggest nickel miner. That is probably enough to ensure that there's another bid coming in the next few weeks or months. Now, Michael, before we leave this story, I actually didn't know the answer to this question, so I had to look it up. But I'm going to ask you, if BHP is the world's
Oh.
I just love the
Sorry.
way you roll your eyes.
No, I'm like, Sean, why, if you didn't know the answer to the question, what on earth makes you think that I'm going to know the answer to this
You are
question?
a genius. So
Okay.
BHP is the third biggest iron ore miner in the world. What are the first two?
Oh, okay. I'm thinking that there must be some maybe in the States. Let me think. What, like, is it perhaps like Rio Tinto, or one of those is actually larger just in iron ore?
Yeah, so Rio Tinto is larger than BHP in iron ore. So okay, I got that bit. But the other one, when I found out the answer, I thought, oh yeah, of course. But I didn't realize that this Brazilian company was the world's largest iron ore producer.
Yeah, it's a good point.
Vale. Yeah.
Yeah, of course it
Vale.
is.
Yeah.
So, you know that when I was saying that about the US, that was just me covering while I was there under the desk Googling. I was trying. It was a bit of a classic kind of magician's move, a deflection.
Yeah.
Like I was trying to distract you over here while I was like, oh, Google, world's biggest iron ore miners. Anyway,
I just didn't realize Vale was that much bigger than BHP and Rio. There you go.
No.
Anyway.
Look, I think we've all learnt something today, Sean. It's a big fortnight, isn't it? For 3 of the 4 major banks, they report half-year earnings with expectations high, as demonstrated, I guess, by their very high share prices.
That's right. National Australia Bank kicks things off on Thursday, and then Westpac and ANZ the following week. Macquarie Group also reports on Friday this week. The results need to be good to avoid a sell-off because share prices are at or around multi-year highs. Analysts will be watching very closely to see what's happening to net interest margins, the difference between what a bank pays on deposits and receives on loans, basically their profit margins, and also whether the economic slowdown has hit bad debts too much. It hasn't happened yet. We haven't seen a big breakout in bad debts yet, but if that does happen, then you can expect to see banks sold off. The fact that it hasn't happened yet probably means the banks have more cash in reserve, which means we could end up with plenty of dividends from the big banks. Of course, they're all important, those dividends, especially for many retirees who rely on bank payouts to fund their retirement. It all starts on Thursday. Within about a week, we'll have a much better idea of how the largest sector on the ASX is performing, the financials.
Sean, Woolworths has more aggressively cut prices than Coles in a bid to catch its arch rival, which is outperforming on both sales growth and market share.
So Woolies is the Rio of the supermarket sector versus Coles, which is the BHP.
How about now everything's
going to be about iron ore.
Yeah. It's become our new measure on this show.
So Woolies are larger of the two. Coles has been the better performer in recent months, though. JP Morgan surveyed about 120 private label packaged goods and found that Woolies had reduced its price premium to Aldi. In itself, it's an interesting way to measure. It's how you base yourself against Aldi, because Aldi is definitely the cheapest of all. But Woolies had reduced its price premium to Aldi by about 160 basis points to 7.8% in April. So it's 7.8% more expensive than Aldi. It was 9.4% more expensive in March. Now, Coles' premium to Aldi was at 7.7% compared to 7.9% in March. What that says is Coles is still marginally cheaper than Woolies, but it's a lot closer than it was in March, a month ago, when Coles was substantially cheaper than Woolies. Hard to get all that out, doesn't it? Anyway, according to a report in the Financial Review, among the biggest drivers were price cuts at Woolies and Coles of lamb, sausages and deli, chicken, beef, pork, as well as cheese and baked goods. Don't you love writing that? Lamb, sausages, deli, chicken, beef, pork.
I love the way that beef and pork became one. So it feels like kind of the used to buy dumplings at a fantastic little dumpling shop, a little restaurant. It was fantastic, best dumplings ever. But you would buy the steamed meat-filled dumplings, and it wouldn't specify what the meat was, and you would just assume it was perhaps beef or pork, or in your case, beef pork.
That's right.
A mixture of all of the available meats, and it's better not to ask. But my God, they were delicious.
I'm sure. And this story, Coles and Woolies are both providing third quarter sales updates this week, Michael.
went a little bit off track there. Now, Sean, this next story is really quite extraordinary. Super Retail Group's share price sank 3.4% on Friday after accusations that the CEO, Anthony Herity, and the former head of HR, Jane Kelly, were in an undisclosed relationship.
What I'd say about this story is that they're all allegations and we don't know what's gone on. That's actually the only thing we can say about this story.
Yeah.
So apparently Super Retail Group offered to settle a legal claim from at least two executives over an alleged secret affair between its chief executive and its HR manager, but that was rejected, according to a report in The Australian. The Australian goes on to say Mr. Herity and Ms. Kelly denied they had any sexual relationships. So I'm not sure what the undisclosed relationship actually was. Now, apparently, Harmer's workplace lawyers engaged in mediation talks with Super Retail earlier this year, seeking losses and damages on behalf of its clients that could be worth between 30 million and 50 million, which seem extremely high. Those mediation talks later failed. On Friday, Super Retail proactively came out and told the ASX it was being pursued by lawyers acting for two current executives. I think that what we can confidently say about this one is that we don't know what happened. And so we will be following it, though.
Yeah, certainly. Now, Sean, the co-founder and co-CEO of Atlassian, Scott Farquhar, will step down from running the business, ending a 23-year collaboration with partner Mike Cannon-Brookes that's created Australia's largest tech company.
Yes, the news came out on Friday. The two have built a $50 billion business, that's about 80 billion Aussie, and been largely interchangeable. The company now has 300,000 customers using its cloud products and more than $1 billion in subscription revenue. For the 3 months to the end of March, revenue grew 30%, which was better than expected. The sticky point of the Atlassian core story, and it always has been, is the lack of profit. So for the March quarter, it did make a profit, but the company's on track to actually post a loss for the 12 months to the end of June. Anyway, Mr. Farquhar is bowing out. Mr. Cannon-Brookes will have to work out that profit part of the puzzle by himself.
All right, turning to international news now. And Sean, it's not often we talk about Titanic on this podcast, but how about this one? A gold pocket watch that was recovered from the body of the richest man on the Titanic has sold for a record-breaking £1.175 million over the weekend.
The watch was sold to a private collector in the US for the highest amount ever for Titanic memorabilia, according to the auctioneers. The original owner of the watch, businessman John Jacob Astor, he was 47. He went down with the ship in 1912 after seeing his new wife, Madeline, onto a lifeboat. Now, the previous highest amount paid for Titanic artifacts was $1.1 million for a violin that was actually being played as the ship sank. It sold at the same auction house back in 2013, according to Bloomberg. The case for that violin was also sold over the weekend, and it went for £360,000. Now, I like the John Jacob Astor story. Apparently, he put his new wife, Madeline, onto a lifeboat. Rather than try his luck with another safety vessel, the impeccably dressed Astor, who was a prominent member of the very wealthy Astor family, was last seen smoking a cigarette and chatting with a fellow passenger. His body was recovered from the Atlantic Ocean 7 days later, and his 14-karat gold Waltham pocket watch engraved JJA was found, and that's what was sold.
It's all a bit grim, though, isn't it?
It is it's a fantastic story, but I just like the idea that this, true gentleman,
yes,
he put his wife on the boat and saved her, and then went down with the ship.
Goodness me. That's an extraordinary story. Now, up next, it's hard to transition from there into our daily interview, isn't it?
Yeah.
But you've got a great interview coming up. You're speaking with Julian Biggins, Joint CEO at Global Alternative Asset Manager, MA Financial Group.
Yes, we're talking about investing in real estate, but alternative real estate, things like marinas and pubs and things like that. It's a great chat.
Yeah, it's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for the Fear and Greed newsletter. It's a weekly newsletter. It comes out every Wednesday, and it's really an opportunity for you to kind of cut loose and tell us what you really think about a whole range of different stories, isn't it?
Yeah. It's great fun, the newsletter, because we really, I have the opportunity to sort of say it how I see it. Because the podcast itself, we're trying to give both sides of the story. We are, black and white, never grey is how I'd put it, Michael. Like kind of helping people be successful. In the newsletter, I get to be a little bit more opinionated.
Yeah, it is fantastic. And I tell you what, it has taken off in the last few weeks. The sign-ups to this newsletter, head along to fearandgreed.com.au. It comes out once a week on a Wednesday, so you do not want to miss this week's edition. And something else you don't want to miss is Fear and Greed the Week Ahead, featuring our resident economist, Stephen Koukoulas, who loves all that colourful economics language like jawboning and sticky inflation.
He does. I don't think he's quite recovered yet from those inflation figures of last week, though. His heart is still racing.
It's quite extraordinary, isn't it? There we go. Thank you, Sean.
Thanks, Michael.
It's Monday, the 29th of April, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.